Hey guys, and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and in today's video we're going to be talking about inflation and the effect that might be having on the UK housing market and property prices moving forward. There's lots and lots of reports out in the news at the moment. I want to break them down for you and give you as much knowledge as possible. As you know, if you could possibly give this video a like, it massively helps me out with the algorithm. I would massively appreciate that. And if you haven't already subscribed, please consider subscribing. We give away the dividends on our dividend portfolio every month, so there's cash going out to our subscribers every month. On top of that, once we get to 100,000 subscribers, we're going to be giving away an investment house. Not this one, but our investment house. This one I'm going to be moving out of very, very shortly. But doesn't it look amazing, Nick? Like all the grass and everything done. Perfect. Let's get into the whiteboard though, guys. Let's see what we can find out about inflation and what effect that might be having on the housing market coming up. Let's go, guys. So guys, welcome to the whiteboard, and as soon as we got in here, my videographer Nick just went, well, what is inflation, Mark? So I think I'll answer that first of all. Now, inflation is defined as the rise in prices, or the gradual rise in prices, and the reduction in purchasing power of money. Now, some people say it's because we're printing money, but there's lots of reasons that inflation can happen. So the important thing is that it's the rise in prices when you go to buy something, and the reduction in purchasing power of the money that you have in your pocket. Now, in the UK, we've averaged over a long period of time around 3 to 5%, but in the short term, i.e. the last 10 to 15 years, probably more around 2%. And the Bank of England set the target inflation rate currently at 2%, is what they want to inflate the economy by. Now, I know lots of people think inflation's bad, but there's lots of good reasons for inflation. And I want to highlight those first of all, so that you're not too scared of inflation. You understand its importance in economics. First of all, it encourages spending and investment. Now, if every year the car that you're going to buy increases in cost by 2%, let's say if we're averaging at that, then it encourages you to go out and spend today. Now, that's just a rudimentary example, right? But this is across the entire economy. If you're a company and you're looking to invest in something, next year it's 2% more, it encourages you to make that investment today. It's all about encouraging action out of the economy. And what it really does is it stimulates the economy and makes it move forward. So by us going out and buying that car this year rather than next year, we then have to produce an extra car. And this then means more people have jobs, and then inflation continues. So inflation is very, very important for a lot of reasons, but the first one is to stimulate demand, investment and spending. So that's really key. So I'm going to write that down quickly. So another reason that inflation's good, and it kind of links back to the demand and investment and spending, is it means that borrowing becomes cheaper over time. Now, a good example of this, and most people watching my channel will have parents or grandparents who owned a property at some point, and they'll be well aware that that property was bought for a lot less than it would be bought for today, or built for a lot less than it would be built for today as well. Now, the importance of that really is that you might borrow, for example, £100,000 today. And let's say that interest rates are at 5%, but inflation's running at 2%. Well, actually, you're only paying 3% really, because every year the loan is being devalued to the tune of 2%. Does that make sense? So it's not quite as fixed as that, and I'm simplifying it a lot here, but I do want to make it simple so that everybody can understand. Now, the interesting thing that we find ourselves in the moment, for example, with mortgage rates, is that inflation is currently running at about 2.5%, I think, is the current estimate for 2021. We have had an uptick in inflation, and that's really down to COVID, and there's lots of reasons behind that, and we'll go into that in a minute. But really, if you're borrowing, for example, I'm borrowing on personal mortgages at like 1.5%, and I'm borrowing on a limited company at like 3 to 3.5%, well, actually the cost of borrowing is very, very low, because every year your loan is being devalued by 2.5%. So let's see what that looks like over the long term, shall we? Should we do an example of £100,000? And we'll look at how much you're going to pay back. Let's say, for example, we're not going to pay any of the principal, but we're just going to see how much that loan is going to be worth in 35 years if we continue to devalue at 2.5% a year. So I've just done the sums, and Nick will put it up in the screen, but about £58,000 is going to be paid off by inflation in terms of purchasing power, not in actual. You'll still owe £100,000, but it would be as if you only owed £42,000, if that makes sense. So over time, inflation really does take an effect on debts. And this works on a personal level, i.e. on your mortgages, but it also works on the national debt. If you look at the national debt over time, it's risen, but things that we borrowed a long time ago have been inflated down in terms of value. So inflation really does have a key role in stimulating the economy. The majority of it around is making sure that there is demand, investment and spending going on, as well as borrowing. Now, how do we control inflation? For example, you can see how the cycle could really overheat if you can borrow money in order to invest and then the value decreases. Well, we control it, or the central banks control it, with interest rates. Now, at the moment, this is the worry, okay, is at the moment, interest rates are at a historic low. In the UK, it's 0.1%, basically nothing, 0.1%. Absolute historic low. We're out of paper, Nick. Right guys, now we've changed the paper, so I do apologise about that. We can talk about the Bank of England rate being currently at 0.1%, a historic low. So the worry is that as inflation increases, the Bank of England will be forced to increase interest rates to curtail and control that inflation. Now, when they do that, essentially what happens is the cost of borrowing, as discussed on the previous sheet, goes up. And in turn, what that means for people in the property market, like myself, is that the cost of mortgages go up. Now, let's have a look at what would happen to me, for example, if mortgage rates were to increase by 1%. Now, assuming I can't raise my rents, assuming all things being equal, and I don't believe that to be the case, let me just be clear, but assuming all things being equal, I've got about £2 million worth of debt on properties. If the interest rates were to increase by 1%, that to me would increase my costs by about, was it £20,000 a year? So guys, I just checked on my financial forecast. I don't actually have £2 million worth of loans. I have about 1.5 million. I was just thinking about it in my head when I was doing the sums, and I was thinking, I can't have that much debt. And I've just realised that a lot of my properties have gone up and I haven't remortgaged them yet. So although I've got £3 million of properties, over the last sort of year, that's increased by about £300,000. And as of to date, I've only remortgaged one of 13 properties. I've got 2 more going through at the moment, but I haven't taken the money out yet. So my mortgage rate, I'm still only running at about 50% LTV. That's going to come back to probably 60% over the rest of this year. But 1.5 million is my current outstanding. If interest rates were to rise by 1%, that would represent to me a cost of about 15k per year, or just over £1,000 a month. So out of my profit that would have to come, or it would have to be additional rent, which again would squeeze the incomes of people who are renting from me. Now in historic times, what's happened is the landlord passed that cost on to renters. The reason being, we don't want to invest if we're not going to make a profit. For a single let, the historic rate of return has been somewhere between 8 and 13% ROI, cash on cash. Yields have reduced versus the value of the property, but so has interest rates. So when you actually look at it on a solid cash on cash basis, they've stayed pretty static. In terms of HMOs, they're about 20%, 15 to 20%. So these sort of figures haven't changed that much over the last decade or two. And we need to be mindful of that fact that if interest rates rise, that could squeeze the incomes. Now you start squeezing the incomes, you start squeezing the demand. You start squeezing the demand, you start squeezing the production. You start squeezing the production, you start squeezing the investment. And that is the worry. Now, what's my opinion? Now, we understand why it's good. We understand what the alternative would be if we started raising interest rates and why that could have a negative effect on the economy and as property investors on ourselves. But let's have a look at what the Bank of England are actually saying and what they think the future holds for the UK. So what I've done is I've got Nick to put a screenshot up in the corner of the Bank of England's projections for inflation over the next few years. And this reaches out into 2024. And as you can see, the darker the colour, the more certainty they have. And obviously there's lots of variables that could affect this in the future, and therefore as the shades get lighter, the certainty reduces. So they're aiming for around 2%, but accepting, there was a big note in the comments that there may be a transitory period where inflation spikes in 2021 before returning down to the 2% mean. So the Bank of England really have confidence in the fact that the inflation is going to run around 2%. This doesn't mean that interest rates are never going to rise. It just means for me, there's a lot of parts of the economy that have suffered during this crisis, and they're going to give it time to recover and before they start removing purchasing power. So my gut instinct is that we're probably in for a few boom years of property before we see a correction. Will we see a correction? Absolutely. There's another video I want to do about the 18-year cycle, and that's due to finish, I think, in 2026. And that's been a very, very good indicator for property prices over a long period of time in the UK. But yeah, the 18-year cycle, I can definitely see that playing in to the property cycle this time round. And I could see a very sharp rise in property prices personally over the next 3 or 4 years should the economy start to boom, should investment really return to the UK. We've had a lot of headwinds. We've had Brexit, we've had coronavirus. If we have a bit of fair sailing, I can see the economy really booming. But that's just my opinion. You guys let me know what you think down in the comments. I personally think that we're going to probably see some good rises in property growth over the next few years, followed by, I do believe there will be a correction, probably 25, 26, something like that, probably 10, 15%. If you look at historics, that's roughly where it's going to land, but nobody knows for sure. Remember, I'm not an economist, I don't know the future, nobody does. The reality is, all I want to do is give you the information, give you my perspective, and then you can make your own investment choices. So for me, as an investor, I'm not looking to reduce my £1.5 million debt pile. I'm going to continue adding to that. I'm going to continue purchasing properties. I've got a strong belief that the market's going to move in the right direction for me. That's my opinion. I'm going to put my money where my mouth is and I'm going to look to make some more cash. I'm a capitalist. I suggest that you take a view, make your moves, and I wish you all the best. See you again on Friday when we'll have a vlog style video. We're moving the studio all the way to Newbury, so we'll see you then. Thanks so much.